Broadcast is now starting. All attendees are in listen-only mode.
Okay, guys. Good evening. Hope everybody's doing well. Just want to do a technical check before we start. First of all, welcome you guys joining us from GoToWebinar, iTrader.com traders, and I would like to welcome the rest of you joining us from our homepage on Facebook at iTrader.com. You have a chat window, you guys on GoToWebinar. So if you have any questions during the webinar, of course, you can write me down and ask whatever you like. I just want to do a technical check, see that everyone can hear my voice and see my screen. So are we good, guys? Hey, Kathy. Can you hear my voice? Can you see the screen? Our homepage at iTrader.com. All right, great. Okay. Looking good. All right. So if you're going to have any questions during the webinar, more than welcome, of course, to ask me, and I'll do my best in order to try to get to all of you. And actually, I wanted to talk about commodity trading, and I will. Okay. I had a lot of customers talking to me and saying, you know, we're trading on currencies and so on, and in stocks in general, and of course indices, which these indices, you know, are the stocks are included in the indices because an index is a part of stocks. And we have the currencies and the major events and how they affect these currencies. And commodities. I didn't talk a lot about commodities last time. We did some technical trading and technical analysis. But first, before we start, I want to go live to the market because we have a big day in the market today, and a lot of going on is in the market. So let's take a look at what we had today. All right. I don't know if you know. Okay. If you follow the market, you should know. Today we got to know the next, what we call, chairman of the Fed. Okay, the president of the Fed. We're talking about Jerome Powell. All right. And are you guys familiar with that? Yeah, gold is dropping. We're going to talk about why. All right. You know why gold is dropping, Kathy? What is the reason? Okay, so we have a new president of the Fed. Okay, the Fed is the central bank of the United States. Janet Yellen was. We have 16 members in the Fed. Okay, these guys, they determine the monetary policy of the United States of America. Janet Yellen was the head of the Fed, and now Jerome Powell, okay, replaced her. He's one of Donald Trump's men, and announced euro negative. Yeah, but I'm going to give you the reason right now. So, as we said, Janet Yellen left office. Now Jerome Powell is the president of the Fed, and he gave out a speech today on Congress, and he's gonna give another speech in 2 days. I just want to show you what was the speech all about, and I think trading it was pretty easy if you look at the details themselves. All right, so okay. On CNBC, okay, everybody knows CNBC, right? If you work with us or iTrader, Powell Fed members will be taking other look at rate projections. You can see Fed Chairman, the new one, Jerome Powell, indicates that the Fed plans to hike rates 3 times this year and may be inclined to a fourth. Okay, repeating previous warning, Powell says the central bank has to be careful as stock market prices continue to rise. So, as you probably know, if you've been here in the past year in my webinars, I showed you that the stock market, the American stock market, is getting stronger from day to day. All right, people are buying stocks. The economy looks in a great situation. And guys, when the stock market is getting stronger, which means these companies that held the stocks making more money, okay, do you understand the danger for us as public when these companies are making more money? We buy their stocks, okay, and they're doing good, and then we are afraid of inflation. The prices will fly up, and our salaries won't be able to buy us the food that we want, all right, the new car, the new house, okay, living, okay, inflation. If inflation goes up, that's a bad sign. Okay, one of the ways to treat high inflation is by the central bank raising the interest rates. Okay, if interest rate is going up, this is one of the way to treat inflations. And we, when Janet Yellen was the president, we expected 3 hikes. And now when we have the new president by Donald Trump, which is Jerome Powell, okay, he had a speech today in Congress talking about maybe 4 hikes. Okay, if you go to the FOMC group, okay, CME group, by the way, talking about the members of the Fed, and we have expectations, okay, for hike rates. Okay, so right now the interest rate in the United States, as you probably know, is 1.5%, and the next interest rate decision will take place in less than a month on March 21st, as you can see here. All right, 87, almost 87.4%. We expect interest rate to go up from 1.5 to 1.75%. Okay, next time will be on May 2nd. That we expected to stay the same. If we go to the end of the year in December, so and usually the CME group are pretty right. Okay, this is a very serious organization. They're talking about interest rate of 2.25. Okay, 2.25. So we're talking about 3 hikes and maybe as you can see, all the way up to 2.5, which is 4 hikes after hearing Jerome Powell today. Now, guys, I want to hear you out. I mean, you're trading with us. I want to understand if interest rates are going up. Okay, if Jerome Powell, the new president, is afraid of inflation. Okay, interest rates are going up. Okay, we expected not 3 hikes but 4 hikes. What do you think should happen after the announcement to the US dollar? Will it go up or down? Interest rate higher, is it better for the currency? Is it bad? Is it good? Okay, I would like you to participate because I want to know that you understand what we're talking about, all right? So, if interest rate is higher, guys, this is a pretty basic questions in the capital market, okay? This is one of the things that for us as traders we must know. Interest rate is going up, the currency is getting stronger. When Jerome Powell talked about 4 hikes rather than 3 hikes, okay, we expected the US dollar to get stronger. All right, guys, you have a chat window. You can write me down in English and then press enter. All right, great. So yes, I'm going to talk about commodities. I just want to show you what's going on in the market right now, and then we're going to go on to commodities. All right, because this is what the market is doing right now, guys. Okay, so just for you to know, US dollar is getting stronger. You see euro versus the dollar is dropping down. Okay, the US dollar is getting stronger because of this announcement. The gold is getting weaker, of course, opposite correlation with the US dollar, and the stock market is falling down because when money goes to the currency, it goes off the stock market. Pretty easy market, right? Okay, great. So let's go on and let's talk about commodities because that's what we're here for. I just wanted to give you a few minutes talking live about what we have in the market right now. And you guys wanted me to talk about commodity trading. So here I am. And let's try to understand. Okay, commodity trading. Commodities are a huge part of trading portfolios. Okay, a lot of people are trading commodities. And there is one huge difference between commodity, okay, commodity different. I'm sorry, commodity trading and trading in general. Okay, like we usually trade currencies and stocks and so on and indices. And let me try to explain you what is the major one. So commodities are a huge part of trading portfolios. As we said, commodities generate opportunities on daily basis. Commodities are unique because of the importance of supply and not only demand. All right, and other trading assets like stocks, indices, and Forex don't trade based on supply usually. Okay, so when we talk about, guys, when we talk about the other assets, okay, we're talking only about demand. Okay, demand for a certain currency. Okay, demand for a stock, right? With stocks, we have the same supply. Think about it. Usually, okay, the company issues out stocks, and we have the same number of stocks. If we have more demand for the stocks, more buyers, the price goes up. More sellers, the price goes down. Same for currencies. If I trade on the euro versus the dollar, the British pound versus the dollar, if we have more demand for the British pound is getting stronger, if we have more demand for the US dollar is getting stronger. So it's all about demand, it's not about the supply, because we usually have the same number of currencies. When we talk about commodities, this is different. There's a huge, of course, with currencies, we have the supply of money and how much the central bank is printing, okay, in general. But the thing with commodities is we have a certain supply, and it affects the market usually much more than the demand. So this is a very important thing for you to remember. Other trading assets like stocks, as we said, are not based on supply. Okay, so therefore, commodity traders based a big portion of their analysis on supply issues. All right, so commodities, it's just like any other assets, as we said, it's about demand and supply, but mostly you would like to take a look at the supply thing, because these issues include production of oil, copper, wheat, and more. All right, you have all the commodities on the MetaTrader, and of course, you're more than welcome to trade on them when you trade, when you diversify your portfolio. We said it in previous webinars. The smart thing to do is to diversify your portfolio. Don't put all the eggs in one basket. You can trade currencies, you can trade stocks and indices, which is almost the same. And then, of course, you can trade the commodities. So low supply usually pushes price higher, while high supply pushes prices lower. Demand is also important for commodity trading, especially when supply is stable. Okay, so when the supply is stable, all right, of course, we're talking about demand just like any other asset. But low supply, if we have less than something, right? Let's try to understand the prices movement. Okay, so when we have a lot of supply, out of doesn't matter what. Okay, if we have a lot of wheat, if we have a lot of let's say wheat. Okay, let's talk about wheat. Okay, we want to break bread, right? Everybody's eating bread. Very good, unless you're in a diet. So, but wheat is a big deal. Now, if we have a lot of supply of wheat, what do you think happened to wheat prices? Will it go up or down when we have a lot of supply? Okay, larger supply, more sales, which means the prices are going down. Okay, when we have big supply, the prices are lower. When we have low supply, okay, it doesn't matter what commodities it is. When we have less than something, the price is higher. Okay, and commodities are based on supply, of course, on demand as well, when the supply is stable. Okay. Here are a few examples for supply scenarios. Okay, OPEC. Everybody knows OPEC. OPEC is the what we call oil organization. Okay, these are the 14 countries responsible for more than 30% out of the oil export in the world. The biggest one is Saudi Arabia, and then we have the countries on the Gulf version. Okay, Qatar and UAE and so on. We have Algeria, we have Venezuela, a few countries in South America. So we're talking about 14 oil countries. They are an OPEC organization. They're responsible to more than 30% out of the oil export in the world. Okay, when you drive your car, okay, usually it comes from these guys. So OPEC schedules 2 meetings a year in May and November. Okay, you can write down the dates. Both of them are taking place in Vienna, just for you to know. The OPEC meeting, you can find them on the OPEC website. On May 30th and November 30th, these twice a year, they have major meetings, which in these meetings they actually OPEC actually agrees on whether to produce more oil or cut the production. Now, if they make a decision to cut the production more than expected, okay, because this whole market is based on expectations, right? We have the forecast and then we have the actual results. And we as traders, what we need to understand, guys, okay, because a lot of people tell me, okay, they decided to cut production. Why don't the prices going up? Because the market is based on expectations. You got to read before the meeting, okay, twice a year, or read before the meeting whether, and you have, by the way, we have a weekly event, as you probably know, the oil change, the number of oil barrels in the United States. Okay, it's a weekly event and it affects the market strongly. So usually a reading that is lower than expected, we expect the price to go up if we have less oil than expected, right? Supply. And if, of course, if we have more than expected, we expect on this weekly event the prices of oil to go down, and of course the correlated currencies and assets to go the same way. Okay, so when OPEC schedules 2 meetings a year, we said in May and November. If they're gonna decide to cut the production of oil more than expected, of course we expect the oil prices to fly up, and the opposite. Okay, just to show you a few examples. if we go to, let's go to oil, CL, you see, these are the commodities, by the way. You have here copper and soybean, sugar, platinum, orange juice, coffee, cotton, and so on. So let's start with oil. Okay, so C, I go C until I find CL. There you go. Put it here. Let's go daily. All right, and let's go backwards. I want to go all the way to November 30th, which was the meeting was here, and you can see that in effect, you see this was the day of the meeting. Okay, they've decided to cut production more than expected, and you can see that this is a daily chart, by the way. Each candle represent one day. You can see the effect of this meeting for a long time. They decided to cut production, then oil prices flew up all the way from around $55 per barrel to 65. We're talking about $10 per barrel, which is 20%, which is a huge movement in oil. All right. If we try to calculate it, okay, if I was trading, what is it? We're talking about uh, from November here, 30th of November, all the way to here. So we're talking about a month and a half, maybe 2 months, okay? That if we take, for example, 10K, okay, you get leverage of 1 to 50 with commodities, and the price was 55. So we're talking about 9,000 barrels, and the movement was around $10 per barrel. So we're talking about $90,000 for 10,000 investment if you would do it back then. Okay, so 900% is pretty good, isn't it? Okay, let's go backwards and look at May. Okay, on May 30th, which was here, 2017, back here, and then we had a meeting here. Okay, and then oil prices dropped because they wanted to cut production. They didn't cut as much as we thought, and this was the reaction of the market. All right, so pretty easy to understand. Okay, you can go to OPEC website and read about the meetings and the results themselves, and of course read the forecast before that. Now, in these meetings, they decide how to control supply cuts or extend production. All right, we said it. OPEC controls more than 30% of the global production of oil. Okay, this is one commodity. Now, agricultural commodities like wheat, corn, oranges, and more are natural events, okay? Because the demand for these commodities is stable. Supply is extremely important, okay? Everybody needs wheat all the time. Everybody needs oranges all the time. Everybody needs corn all the time, okay? So the demand is very stable. When the demand is very stable, we look at natural events that might affect supply. And these natural events in commodities are very important, okay? For example, Hurricane Irma, everybody remember why it was all over the news in Florida, right? Pushed orange. We have a lot of oranges in Florida, just for you to know, because of the weather. Okay, it's about weather. It's about farming. Hurricane Irma pushed orange prices higher because it hit Florida. Okay, pretty easy. The hurricane hit Florida. This is a natural event. We cannot, bomb the hurricane. We cannot change it. Okay, we knew it. It came into Florida. It ruined a lot of orange fields. We had less orange. Orange prices flew up. Pretty easy, right? Okay. Another example. U.S. summer drugs push the prices of wheat and corn higher. We have less wheat, less corn. Prices are going up. Okay. So as you can see, it changes the supply, not the demand, because the demand is stable. It stays the same. Everybody eats bread. Everybody's having, I don't know, popcorn. Okay. Everybody needs wheat. Everybody needs corn for many uses. If we have less than that, okay, the prices are going up. And of course, by the way, we have a lot of correlation between these commodities and other things. For example, when we have more wheat, okay, we need more heavy machinery to cut the wheat, and then the price is correlated with the prices of Caterpillar, for example. This is a company, okay, if you want to trade stock and commodity, this is a company that make heavy equipment. Okay, so this is one thing, all right? Everything is correlated in this capital market. This is what's so pretty about it, that you can diversify your portfolio and you don't have to trade on one asset, but you can choose a few ones. Okay, so today we're talking about commodities. Last time we talked about, I don't know, currencies or stocks. If you understand the correlation between these assets, if you understand how the world is working, it's pretty easy. Okay, so supply and demand. Kathy is saying less supply, more Expensive, more supply, less expensive. Exactly, you got it. All right. Copper prices can push higher on Chile or South Africa mine strikes. Okay. Of course, we have less copper. By the way, this is very this is very interesting. Okay, think about it. Copper. Okay, everybody knows copper. Do you know Tesla, guys? Tesla. You know what Tesla are doing? Here you have the. Let's go to the MetaTrader. Looking at the U.S. stocks here, you can find Tesla down here somewhere under T. The U.S. market right now is open. Tesla is a beautiful. Look at this. Look at this. Prices of Tesla are flying up. You see, if you go monthly, okay, this is a monthly chart of Tesla. You know what Tesla are doing? Tesla are building. Okay, I won't say that. Okay, Tesla are doing building electric cars. Okay, and this is a very I would say a very interesting stock. You see, because we have a lot of demand for this stock. You can see that the prices of Tesla are flying up. But if we're gonna check, okay, Tesla's let's go. I don't know. Let's check it on C, for example. All right, let's check it here. Let's go to CNBC. And let's write down Tesla. I want to show you a few things. Or we can do it on Google Finance maybe. Okay, let's go here. Let's just write Tesla. I want to show you a few things on Tesla, and to show you the correlation. Okay, so this is Tesla, right? Let's click on finance or summary. We have a summary of Tesla. I want to show you something. Okay, so EPS. I don't see the EPS here. I just wanted to show you that they're losing money. We're gonna find it in just a second. News, more is good. Overview, compare financials. Maybe I'm trying to learn it with you guys. See, this is the pretty of the webinar, so we can do it together. Okay, so if I go Tesla, Google Finance, summary. Let's see if I'll get something. Oh, sorry, misspelled it. Let's check. Same thing. Okay, I don't know if I can find the EPS here. Anyhow, you see they have no P ratio because they're losing money. Okay, the EPS is negative. Okay, why they're losing money? Because it's startup. But still, people are buying their stock because everybody believes that the world is going into electric cars. Okay, now electric cars. Okay, what I wanted to show you, we need 3 times more copper than regular cars. So we have so the Tesla, the future of the cars is highly correlated with copper. So you understand that we have correlation between stocks and commodities as well. This is what I wanted to prove, but anyhow, I didn't find the EPS, which is negative. It was positive. It's negative annually. It was positive for the last quarter. So you understand natural events affect the supply of these commodities, and by that the prices. Demand issues with commodity trading. Gold rises no stronger demand because of high market volatility. When you see that the VIX index is high, the index of fear, okay, when the stock market is falling down and we have a lot of uncertainty, okay, usually the gold is what we call a safe haven, okay, we talked about it in past webinars. Work with an opposite correlation, just like Kathy said, with the US dollar, okay. Gold is correlated with silver, therefore silver can push higher on volatility as well. Okay, when we have high volatility, we see gold and silver going up. Copper prices can rise on higher growth from China, for example, and more demand for cars could push demand for platinum. Okay, so all of these things are correlated. If we look at the market, okay, look at today. US versus JPY, okay, let's put it on a daily chart, flew up, you see, because of the Powell announcement for the interest rate. So euro versus the dollar went down because here the dollar is the secondary currency and it went down, okay, which means the same thing, the dollar is getting stronger. If I look at the Great British Pound without even seeing it, we're going to see a red candle today because the dollar is getting stronger. Same thing. What do you think happened to gold? Come on, guys. Gold, opposite correlation. US dollar is getting stronger. What happens to gold? Gold and silver. Right. So we have gold prices are hiking up, as you can see here. Sorry, going down. I'm sorry, because the dollar is getting stronger. All right, dollar is getting stronger, opposite correlation. Gold is going down. Silver is going down as well. Do you see the correlation between gold and silver? Both of them metal commodities, opposite correlation to the major currencies, especially the US dollar. And of course, the stock market just dropped down today. Let's take a look at the S&P 500, which represents. This is interesting because we had prices. You see, the stock market went up. We were afraid of inflation, and then the U.S. government, the U.S. Central Bank, the Fed, have published the bonds for 10 years, and it was 2.9, almost 3%, which right now the interest rate is 1.5. So a lot of money moved from the stock market to the banks, to savings. Stock market fell down, started, the prices were very cheap. People started to buy stocks again. And then you can see today this red candle because of the Powell speech, which made the US dollar go stronger and the prices of the stocks to go down. All right, good. Back to the PowerPoint. Let's see what else I wrote for today on commodities. So, you wonder what will happen with the Italian election next week. I'm going to talk about it in just a second. Would you like me to? Okay, because we don't need a different webinar for that. That's a great question. So copper prices, as we can rise, higher growth from China, and more demand for cars could push demand for platinum, and good luck. All right, so we talked about commodities. I just want you to remember that commodities is mostly about the supply, because the demand usually is the same. Okay, if OPEC are cutting production of oil, we expect oil prices to go up, and the opposite. You have to understand the correlation between what we call countries that are major suppliers of oil and oil prices, just like Norway, for example. So we have the NOK, which is getting stronger when prices of oil are going up, and the opposite. We have the Canadian dollar and the ruble. Everybody knows that Russia, around 40% out of the income is export of gas and oil. Okay, so when oil prices are going up, the ruble is getting stronger, and the opposite. And the US dollar, of course, even though they make the oil from themselves. Okay, we have the copper and the cars, platinum and cars. Okay, very correlated. We have the correlation between gold and silver, same way against the US dollar and the stock market. And it's based on supply. Okay, natural events can change the prices of commodities, so you have to pay attention to that. The Italian elections will take place in a few days, on March the 5th, right? Yeah, on the 5th of March. And we have actually two major parties, all right? Two major parties. One of them is called Five Stars, if you heard about them, all right? Five Stars is an extremely right-wing party, just like if you remember Le Pen in the elections in France, okay? If Five Stars are going to get a lot of power, what do you think will happen to the euro? They want to do what they call, just like we had with the British, the Brexit, right? British exit. We talked about the Brexit. They call it Italalive, right? Which means Italy won't be part of the European Union anymore. This is their goal, okay? So euro will, yeah, it's going to fall down. We expect it to fall down. And if they're not going to get a lot of power, we expect a lot of relief and the euro to get stronger. You got it? All right. Okay. Guys, by the way, next time if you want to register, go to news, webinars. Okay, or talk to your account managers. You can register down here as well. Click on Save Me a Seat. Put in your first name, last name, and your email address. Of course, you can use our educational center. We have a lot of VODs and other courses. By the way, which are great. Okay, you have daily reviews, chart analysis. You can find everything in here. And these webinars on our homepage, they're on YouTube and on our homepage at facebook.com and iTraded.com. So if you missed anything, you can go back. I'm going to be here next week on Tuesday at 6 p.m. GMT time, just at the same hour, talking about the next topic. Kathy is going to be here, right, Kathy? and hopefully you guys are going to join me. And you're welcome, David. And I'm going to talk about the next topic. Okay, last time we talked about technical analysis in general. I showed you some technical indicators such as stochastic RSI and the rest. and Bollinger Bands, okay, support, resistance. We talked about key levels. And guys, as we said, if we know how to combine this fundamental analysis like I showed you today with the technical analysis, it makes you professional traders. The idea for you is to trade smart, diversify your portfolio. I always suggest to work with a bigger portfolio in order to have, take advantage of these opportunities. So we have the coming elections. We have the NFP, by the way, next Friday. And we have the interest rate decision on March 21st. I'm going to have separate webinars explaining how to trade that. And thank you very much for participating. Good luck, trade smart, and see you here next week.